Welcome to Building Credit, which is a part of Self-Hack by Samaritan Youth Services. In this presentation, we'll explore the world of credit scores, understand how to build good credit, and learn how to manage debt responsibly. These are all essential life skills that can empower you to achieve your financial goals. With a good credit score, you'll qualify for better interest rates on loans, have an easier time renting an apartment, and even get better rates on insurance. Let's get started. Think of your credit score as a report card that lenders use to assess how responsible you are with borrowed money. It's based on information in your credit reports, which are maintained by three major credit bureaus: Experian, Equifax, and TransUnion. Your credit score is influenced by several factors, but the most important ones are payment history. This is the biggest factor and looks at how timely you've been with your bill payments. A history of on-time payments is the most important factor influencing your credit score. Credit utilization. This refers to how much credit you're using compared to your total credit limit. Ideally, you should keep this below 30%. Keeping your credit utilization ratio low shows lenders you can manage credit responsibly. Credit mix. This considers the variety of credit accounts you have, such as credit cards, loans, and mortgages. Having a mix of credit accounts can help your score. New credit. This looks at how often you apply for new credit, as frequent applications can lower your score. Applying for too much credit in a short period can be a red flag to lenders. Length of credit history. This considers how long you've had credit accounts open. A longer history is generally better. Maintaining older credit accounts, even if you don't use them often, can improve your score. Building good credit is an investment in your financial future. It can help you save money on loans, secure better housing options, and even get better deals on insurance. With good credit, you'll have more control over your finances and be better positioned to achieve your long-term financial goals. Imagine the joy of standing in front of your new home, knowing you got a great mortgage rate thanks to your good credit score. Building good credit takes time and discipline. The most important thing you can do is develop a habit of paying your bills on time, every time. This includes credit cards, student loans, car payments, rent, and even utilities. Late payments can significantly damage your credit score. If you have no credit history, consider getting a secured credit card. A secured credit card requires a security deposit, which becomes your credit limit. By using the card responsibly and making your payments on time, you can build a positive credit history. Once you've established good credit, you may be able to qualify for an unsecured credit card with a higher limit. Another option is to become an authorized user on someone else's credit card. This can be a good way to build credit if the person you're linked with has a good credit history and makes their payments on time. However, it's important to choose someone you trust and who will manage their credit responsibly, as their negative payment behavior can also impact your score. Credit utilization ratio is the percentage of your credit limit that you're using. It's one of the most important factors influencing your credit score after payment history. Ideally, you should keep your credit utilization ratio below 30%. This shows lenders that you're not overextending yourself with credit and can manage your credit responsibly. Even if you pay your balance in full each month, maxing out your credit cards can still hurt your score. This is because it can make you appear like a risky borrower who relies heavily on credit. It's important to monitor your credit utilization ratio regularly. You can check your credit reports and credit card statements to track your ratio. Most credit card companies also allow you to see your ratio online or through their mobile app. Having a mix of credit accounts can help your credit score. This shows lenders that you can manage different types of credit responsibly. Ideally, your credit mix should include a combination of revolving credit accounts, such as credit cards, and installment loans, such as car loans or mortgages. However, it's important to open new accounts strategically. Applying for too much credit in a short period can lower your score. This is because multiple credit inquiries can signal to lenders that you're in financial trouble or looking to take on a lot of debt. If you're looking to build credit but have limited credit history, consider a credit builder loan. This type of loan is similar to a secured credit card, where you make a deposit and that deposit becomes the amount of your loan. You make regular payments on the loan, and the positive payment history is reported to credit bureaus. Once you've repaid the loan in full, you'll receive your security deposit back. Plus, you'll have a boost to your credit score. Debt can be a burden, but it can also be a tool to help you achieve your financial goals. The key is to manage your debt responsibly. Here are some tips. Create a debt repayment plan. First, list out all of your debts, including the total amount owed, interest rate, and minimum payment. Then prioritize your debts. Typically, you'll want to focus on paying off the debts with the highest interest rates first, as these will accrue the most interest over time. There are two common debt repayment strategies, the avalanche method and the snowball method. The avalanche method focuses on paying off the debt with the highest interest rate first, regardless of the amount owed. The snowball method focuses on paying off the smallest debt first, regardless of the interest rate. Choose the method that motivates you the most. Make more than minimum payments. The minimum payment is just the amount required to keep your account in good standing. However, by making more than the minimum payment, you can pay off your debt faster and save on interest charges. Avoid taking on new debt. While debt can be a useful tool, it's important to avoid taking on more debt than you can manage. Focus on paying down your existing debt before considering any new loans. By following the above tips, you can manage your debt responsibly and achieve your financial goals. It's important to monitor your credit score regularly. This will help you stay on top of your credit health and identify any potential problems early on. You can check your credit reports for free at least once a year from each of the three major credit bureaus, Experian, Equifax, and TransUnion. You can access your free credit reports through annualcreditreport.com. When reviewing your credit reports, be sure to look for any errors, such as incorrect account information, late payments that you didn't make, or accounts that you don't recognize. If you find any errors, dispute them with the credit bureau that reported the error. You can do this online, by mail, or by phone. At the end of the presentation, we will also hand you a dispute handout. Building good credit is a marathon, not a sprint. Here are some habits you can develop to build and maintain good credit over time. Pay your bills on time, every time. This is the single most important factor in building good credit. Late payments can significantly damage your score. Keep your credit utilization ratio low. This ratio is the percentage of your credit limit that you're using. Ideally, you should keep your ratio below 30%. This shows lenders that you're not overextending yourself with credit and can manage your credit responsibly. Don't apply for too much credit at once. Multiple credit inquiries can lower your score. This is because lenders may view you as a risky borrower if you're applying for a lot of credit in a short period. Maintain good credit habits over time. It takes time to build good credit and also takes time to maintain it. By following these tips consistently, you can build and maintain a healthy credit score that will benefit you for years to come. name is Hannah. I'm a direct care worker with Samaritan Youth Services, and I thank you for attending this presentation of Building Credit.